right, what's going on, my fellow wealth creators? Matty Ice here. I want to do a video really quick talking about something that is really concerning to me, and I'm worried that there's gonna be a lot of people that get hurt by this. And no, it's not IUL. I beat that up enough on this channel. This is more. This has to do more with the actual financial and banking system itself. I just saw an update about a program that is expiring, and I think it could potentially cause massive problems later on this year. So I want to forewarn you, give you the information. You do whatever you want with it, but this is the kind of stuff that makes me feel so much better actually, I should put it this way, so grateful that I discovered the infinite banking concept, dividend paying whole life insurance, because this stuff doesn't worry me for my own personal finances very much anymore, because I have moved a large amount, a good majority of my money out of the banking system. So I'm somewhat insulated from this. And that's really why I want to do these types of videos for you guys, is so that you have the information you need to make the best financial decision for yourself. And you could start to mitigate some of the risk of all this chaos and uncertainty that is happening right now. Like, even with this information, we still don't know exactly what's going to happen. But I just think about all the people that are potentially going to get hurt by this. I think the banking system is teetering on the edge of collapse at this point. We'll see what happens. But I got to say, guys, that's why I love mutually owned life insurance companies. I love dividend paying whole life insurance, because when we look at history and we do our research, what are the companies that have always failed throughout history? And what are the companies that have never missed a dividend payment, have always thrived throughout all of these financial disasters? Well, banks are the ones that fail, and mutually owned life insurance companies are the ones that succeed and pay dividends while all of these banks are failing. Like, it's just crazy. Go back to the Great Depression. How many banks failed? 9,000 banks. Mutually owned life insurance companies were paying dividends to policyholders throughout that entire time. Same thing with the savings and loan crisis, which I'm going to go into a little bit more detail in this video too, because it is eerily similar to today. What happened in the savings and loan crisis is eerily similar to what's happening right now in the banking system. What happened during 2008? How many banks failed? Guess who paid dividends throughout the 2008 financial crisis? Mutually owned life insurance companies. I just set up my second infinite banking dividend paying whole life insurance policy. I moved another large amount of money out of my banking accounts, my bank accounts, and into these policies. This company has paid dividend for 146 years straight. So part of why I do this, like why I love these policies, is the peace of mind. Like, we get so stuck on internal rate of return and stuff. What about external rate of return? What about peace of mind? Being able to sleep at night, not worrying about your money, lowering your blood pressure, right? Because you're not so worried about these things. Like, we tend to underestimate those things, but I'll tell you guys, I sleep really good at night when it comes, at least when it comes to just I'm not worried about my money because I have it with the best risk management companies in the world that have never missed a dividend payment. Now, I'm not saying to move all your money. I'm not even telling you to do anything with your money. It's not financial advice. I'm just sharing with you what I'm doing. Like, I still have money in the bank, obviously, to cover monthly expenses, but I keep a much smaller amount now, because I want to stay under the radar in the banking system. I don't want it subject to a bail-in. I want to still be able to still operate my business and stuff like that if the bank were to go under. Whatever. Like, I certainly don't want to rely on FDIC insurance. That is a joke. So I sleep really good at night knowing that I've moved my safe money, my opportunity money, my emergency money out of the banking system. It's with a much safer company, not to mention all the additional benefits that I get from these policies that I don't get from my checking account. 3 to 5% tax-free compound growth for the life of the policy. I get access to the majority of my money. I think I have like 90% access to my money. You take a little bit of a hit in the beginning because there is a cost to buying life insurance. That's what this is. But I have access to the majority of my money. It's going to continue to grow for the rest of the policy, for the life of the policy. Plus, I have the death benefit in case something happens to me. My loved ones are taken care of, right? So we're solving all these problems with one financial vehicle. And that's why I love this stuff. So let me share my screen. I want to show you specifically what has me very concerned right now. And it is the fact that the Fed has no plans to extend the emergency loan program that they launched last year to bail out or in the wake of the collapse of Silicon Valley Bank. First Republic. There was a couple of others, like really, really big banks that failed. And we'll talk about why in a second. But I just saw that they have no plans to extend this program. It's the Bank Term Funding Program. Maybe you've heard of it. And they're no longer making these emergency loans to these financial institutions anymore, as of yesterday. This has me really concerned, guys, because these banks have massive, massive unrealized losses right now. Plus, the commercial real estate market is having a ton of trouble right now. Vacancies are through the roof. A lot of the financing that these commercial real estate properties have is going to reset at much higher interest rates, or it's going to be refinanced at much higher interest rates. So it's going to put so much stress on these financial institutions. Not only do they have all these massive unrealized losses in their portfolio, now they potentially have massive amounts of defaults on commercial real estate loans as well. To me, this is just a disaster waiting to happen unless the Fed comes out with another program or has plans to significantly drop interest rates in the next 6 to 12 months, which it doesn't seem likely because inflation is still really sticky. I don't see how this does not end with a massive banking crisis, right? And the reason that they have such massive unrealized losses, and there's kind of a range among experts, whatever, $650 billion since September 30th, 2023, upwards of $1.7 trillion in unrealized losses. And it's because the Fed raised interest rates so fast, it basically destroyed their bond portfolio, because when you raise interest rates, the value of your bond comes down, and the Fed raised interest rates faster than they ever have in their history since inception. And so it basically annihilated the bond portfolio that these banks were buying. Buying U.S. Treasuries at 0.5% or 1%. Now all of a sudden they're 5.5%. That destroys the value of that bond. And so what happens is, because the banks barely keep any reserves at all because of the stupid fractional reserve banking system, if depositors make more withdrawals than what their reserves can handle, they have to start selling these assets at massive losses. Bank collapses, right? And what happens to your money at that point? Okay, you could say, oh, I've got FDIC insurance. Really? They have less than 1% reserves to match their insane amounts of deposits obligations. Like, I think it was like $18 trillion in deposits that they're insured with, a few $100 billion. It's fractional reserve bailout, fractional reserve insurance, just like the fractional reserve banking system. Like, I'm not relying on that. Not to mention, how long would it take you to get your money? Not to mention, too, here's the other thing that has me really concerned, and why I don't want a lot of money in the banking system. For me personally, is the potential for a bail-in. Guys, this was enacted into law as part of the Dodd-Frank Wall Street Reform and Consumer Act back in response to the 2008 financial crisis, where banks can do a bail-in now. What that means, instead of using taxpayer funds to bail out banks, they can take depositor funds for their bail-in. That's just mind-boggling to me. Imagine waking up one day, bank failed, half of your money in your checking account is just gone in exchange for shares in this now failing institution. Does that sound like a good deal to you? Does that sound like a good place to store your hard-earned money and capital, opportunity money, emergency money? Not me. Like I said, I keep some money in the banks, to pay bills and stuff. But my safe money, my opportunity money, my emergency money, I put most of it into these dividend-paying whole life insurance policies. Now, I'm not saying that to do that. That's not right for everybody, right? That's why you want to make sure if it's something that you're interested in, work with people who know what they're doing, who actually implement this in their own lives. I'll have links down below if you want to book a call and have a conversation about it. But these are just things that you need to be aware of, okay? So that you can make the best decision for you. So like, when I started learning this stuff, I just was no longer comfortable having a large amount of money in the bank. Now, I want to finish up really quick. Let's go back to full screen here. I want to talk a little bit about the savings and loan crisis. And the reason is because what's happening now is very, very similar to what happened during the savings and loan crisis, probably 2008 crisis as well, whatever. But I've been studying specifically the savings and loan crisis. And I got my notes right here. Between 1980 and 1986, a total of 664 insured savings and loan institutions failed. That's a lot. That's a lot. Oh, guess who paid dividends throughout that? Mutually owned life insurance companies. Anyways, if you think if FDIC insurance helps you sleep at night, check this out. In March 1986, the FSLIC, that's basically the FDIC of the savings and loans institutions, had only 3 cents for every dollar of deposits. By the end of the year, 1986, it had only 2/10 of a penny for each dollar. And I'm getting this from, if you guys haven't read this book, absolutely get it. Creature from Jekyll Island. This thing is a masterpiece of history. It's incredible. And but here's why I think it's eerily similar to what's happening right now. So they did all kinds of accounting tricks and bailout programs, whatever. Actually, they weren't doing. I don't think they were doing bailout programs. Maybe they were. I haven't got that far yet. But anyways, let's see. By 1984, here it is. By 1984, the fallout had really begun. The FSLIC closed one institution that year and arranged for the merger of 26 others. So on the surface, that doesn't sound too bad. Like if you're alive in living in 1984 at that time, it's an interesting year too. I just got that book, 1984. But anyways, and you see in the headlines that one bank has failed and 26 others murdered. Okay, not that big of a deal, but that's the crack in the system right there that makes everything else tumble. And over the next few years, 664 of them failed. So what happened last year where there were just a few banks, even though they were massive banks, the Fed stepped in and they created that program that just expired to give banks emergency funding so that they could operate, basically these insolvent institutions, they could operate with these massive unrealized losses. Because if they had to realize those losses, they'd be out of business immediately. All right. So they opened up that program to stop the banking system from collapsing. There were just a few banks. And then all of a sudden, we're like, no, okay, the Fed saved the day, government saved the day. Everything's going to be good, hunky-dory now, right? Wrong. Because now we have something like this program failing. We have commercial real estate market, still have massive unrealized losses. What is going to happen over the next 6 to 12 months? I mean, everything could be fine. We could get that soft landing. I just don't see it though. Interest rates haven't budged. They're still at, I think, 5.25%, 5.5%. You've got inflation that's sticky around 3 to 3.5%, whatever. I think it's 3.2 today. All right. You have massive unrealized losses. What happens when people start to try and make withdrawals and the bank doesn't have enough reserves and to cover those withdrawal requests? They have to sell these assets at massive losses because they don't have this emergency loan program anymore. Plus they have potential defaults on all their commercial real estate loans. Like, to me, this is a recipe for a massive, massive banking crisis. And it's a little scary. Hopefully it's going to be okay. I don't know. But I don't base my decisions on hope. Okay, I prepare for the worst, hope for the best. That's where I have my hope. I hope for the best, but I make my decisions based on data, based on information, based on facts. And the fact is that these financial institutions are sitting on massive losses, potentially even more losses because of the commercial real estate market. Interest rates are still really high. Like I don't see a scenario where a lot of banks make it out okay. I don't see it. And I don't care about banks. I care about the people who have their money in the bank. What are you going to do with this information? I mean, can you really sleep at night knowing that can you really sleep at night knowing this information now and having a ton of your money in the bank? Maybe you can. And if you can, that's fine. If you think everything's going to be okay, that's fine. All I can do is present the information. That's it. So anyways, that's my rant for this video, guys. I just, please be safe out there. Do your research. Make sure you're making the best financial decisions for yourself they're educated, informed decisions. Okay. Like I said, if you want to have a conversation about potentially setting up a policy for you, go ahead and click the link in the description. Check it out. and we'll have a conversation. All right. Either way, I hope you're doing great. I hope you're crushing it. And I will talk to you in the next one. To your success. Matty Ice is out.